Let's bring in now Stephanie Guild of Robinhood and Marcy McGregor of Merrill and Bank of America Private Bank. It's nice to see you both. Stephanie, I think one of the key questions in all of this is, what does retail do? Does retail buy the dip like they were right to do in all of these other occasions and some of the most momentum-like names that have been so closely tied to that cohort? What are you seeing?
The buy the dip reaction function has shifted, just like the markets have. We are still seeing our clients invest, but they're doing it in specific names that they love, so Tesla, NVIDIA. And otherwise, they're kind of peanut buttering more than I've ever seen them and investing in index funds. And then they're using our high cash rates. Like Robinhood has a 4% cash yield. So we're kind of seeing, the both sides. I mean, diversification makes sense right now.
Marcy, how much has this story changed about where you thought this market could go and where we think it might now?
Yeah, we've been telling our clients to focus on the trend line, not the headlines, right? Because there's a lot of noise in headlines. When I take a step back, I think some of the weak economic data from January was really weather related. So I think that's a little bit of a head fake. Now, of course, there's uncertainty around trade policy, so we'll watch that closely. That remains an unknown. But if I think about what the drivers of a market recovery are, in our view, it's going to be above average earnings. We have 6 of the 11 S&P sectors in Q4 posted double-digit year-over-year earnings growth. I think it's going to be about broadening in markets. No head fake there. If you look at the last 2 years in the S&P, less than 30% of the constituents outperform the index. Year to date through yesterday, that number is more like 63% of the index of the constituents are outperforming the index. So broadening is definitely underway. I think when we look later in this year, I think you're going to see this gradual easing of financial conditions, potentially on a weaker dollar. If the growth scare and soft data starts to manifest, you could have a Fed that cuts. Watch the unemployment rate there. And then I think the corporate landscape is set to improve in the second half of the year, despite all this uncertainty around the potential for deregulation, a merger cycle, and possibly the extension of tax cuts. So I think that's what actually drives markets towards recovery. So we're telling clients to buy on weakness and stay diversified. And that includes Europe, that includes international markets, but we still think the U.S. ultimately leads the way.
I just wonder, Marcy, what the reaction is going to be when people, if they do, come to the realization, if they should, that, as I said to the professor, that the administration and this president at this moment just don't care as much about the stock market as people would like to believe. And they're not listening to, investors are not listening to the telegraphing that continues to be underway from this White House. The president, another headline, not concerned about the market sell-off. How many times does the president have to say that, or those around him have to make that case for people to stand up and listen and think that the scorecard they thought mattered the most actually doesn't right now?
Ultimately, I think in that scenario, that's where you may see the Fed step in a little bit. Now, the Fed, I think, is being very intentional about not anticipating policy, not anticipating economic weakness. But if you did start to see the economy starting to slow down, that's when I think Fed cuts could come back on the table. Now, we're a little bit out of consensus here. I think the Fed is in pause mode. I think CPI is going to be very telling tomorrow. I think it's going to show that progress in inflation has stalled out. But in that scenario you're laying out, I think that's where you could get a Fed that starts to, enter in and start easing policy. But again, I still think that's a ways away. I think we get through these clouds of uncertainty and it all comes back to earnings at the end of the day.